Hi and welcome, folks. My name is Pat Gage, and in this short video I'm going to show you and share with you how a real estate syndication works. So let's get started. Okay, there's a lot of inner works and workings into a syndication. Basically, a syndication is where people pool their money together, okay, as it's shown in the graphic here, at a bigger pool of money to go and purchase a large apartment complex, much larger than they can do on their own. And basically what that does is that gives higher returns as well as less risk for everybody involved, because we're buying more than we could individually buy on our own. Now, there's two different sides to a syndication. There's the general partners and also the limited partners. The general partners is the Block G group, and you and others would be considered the limited partners. The general partners do all the work, okay, and I'll explain that here in a slide or two. And the limited partners you're really a silent investor. Okay, the general partners control the deal and do all the heavy lifting, while the limited partner has no heavy lifting at all. Okay, so let's take a look at what's next. How we go out and research. We research and find these opportunities. We put these properties under contract. We look for properties that meet our investing criteria, that hold the best potential return on investment that we've already set up, or what we call our rules of thumb to hit. And when one hits like that, we put a property under contract. Okay, so we look for properties that have a value add opportunity to them. Now, what is a value add opportunity? Now, that is properties that, one, are in appreciating markets, they're increasing in population, as well as have a diverse employment. That's only a couple of our floors that we look for the properties, or I should say the states and the cities that we invest in. Now, let me give you an idea of what value add is in our eyes. Value add is, in our eyes, is rents that have to be taken up to market, rents that are below market value. Okay. Also, there's a lot, or a great amount of deferred maintenance that has to be done on the property. Stuff needs to be fixed up. Stuff has to be, the parking lot be repaved. Units need to be brought online. All that sort of stuff is stuff that we're talking about as a value add. And also, cutting the costs. We've had properties where the cost of running the building is way high. The average standard for expenses for an apartment is 50%. We've looked at properties that run in the 70s and 80%. Those are what we look for, because those are areas we can reduce, which boasts our return to you as well as to the overall property. Now, we take care of everything for our investors. All right, we sign on the loan, we get the mortgage, we obtain the financing. All right, we also are responsible for the property management of the property. We go in and collect the rents. We go in and set the rents. We go in and screen the tenants. We go in and manage the whole property and the talent that's on the property. And we also pay for expenses and use the budgets and pay for expenses and employees and all that sort of stuff. You don't have to do any of this. This is the heavy lifting we were talking about earlier that we take care of, okay? So your first step as a potential investor would be to set up a 15-minute call with myself, Pat Gage, and basically see if the relationship is good. See if what we're telling you and showing you and talking with you is a good fit. Now, also, we'll ask you some questions as well, as far as your investment strategy, how much money do you have to invest, where's the money invested in, and certain things like that. It takes about 15 minutes, but there's a link in the description of this video to set that up. And again, it'll take about 15 minutes, and we look forward to that. Okay, so at that point there too, we'll subscribe you to our monthly newsletter. Okay, and then when an opportunity comes out or is available after the phone call, then you would get the opportunity to look over that investment opportunity. Okay, not everybody on our newsletter gets that information. It's only people who have been what we call pre-qualified and gets the opportunity and the investment opportunity through the newsletter. So now what we do is we have an opportunity to come up then that checks all the boxes, that it checks all of our predetermined, return on investment, our cash on cash, all these different things, which I'll talk about in a few minutes here. All the boxes are checked. Then we notify you as the investor via the newsletter, okay? And then we set up a webinar and we go over more details and we show you how we finance the property, how we're going to run the property, and the such. Okay, so that's kind of the process that we go over with this. And then we also make sure that this is a good fit for you, because we may have the phone call today or tomorrow, and we may not have an investment for 4 or 5 weeks. We don't know where you're at, and again, it may not be a good fit for you. The first one may not be good. Don't know, but we got to make sure it's a good fit for you, and you're the only one that can decide that. Okay. So now, after we do our due diligence and on the property, and it checks all our boxes, right? Then we move into negotiating the contract and getting the property under contract. Because of our conservative investing strategy, we're able to get a lot of these under contract without much negotiation or much haggling, as they say. But we only present opportunities that we have pre-screened and meet all our requirements. Okay. So how are your investments made? How are your returns made in this process, in this syndication process? Well, we buy the building, right? And then from that building, we collect rents, right? And that gives us a cash flow, as they say. And then what we do then is we have business expenses that are associated with running that property, and some of those are listed here. Well, property management fees, insurance costs, repairs and maintenance, property taxes, as well as a few others. And at the end of that, we come to what they call cash flow. Okay, and then that cash flow is distributed on a quarterly basis to our investors, along with the financial paperwork or financial dealings of the property up to that point. So not only you get quarterly distributions, you also get a insider's peek into how the property is actually running. So you'll get those documents typically quarterly. Okay. So how are your returns figured? How does this work? How does this all work? I showed you what goes on in this process, but how are your returns, right? Again, we go back to our apartment building we chose. You'll get an equity percentage, okay, based on the amount of money that you invested. And again, each one of our opportunities have a minimum investment level, okay? And what we do is an 80-20 split, with 80% going to you, the investor. So you own 80% of the investment, and that's how we figure out your returns, okay? So now, what are the targeted returns, or those rules of thumb that I was talking about earlier that we target before we buy the property? Well, let me tell you about those. So we got a property, right? So our first one is AAR, or average annual return. We look for a property to give us around a 12 to 15% average annual return. Okay. Now, we go for a high cash on cash return on a yearly basis. And the third thing that we look for is an internal rate of return higher than 13%. Okay. So these are the rules of thumb that we go through and evaluate. Way back in a lot of slides ago, I told you about that. That's how we evaluate each one of these properties based on these three things here and a couple others, but these are the three major ones. But what I want you also to understand is, let's compare that to the stock market, right? The stock market over the last 30 years has returned 9%. Okay, so we kind of got to compare things and contrast things, and you can see that real estate or syndication is a better way of doing things. So now let's talk about the exit strategy, right? Or the sale of the asset. And that is another area where you participate in, or I should say you gain benefit from. You participate in, but you're, again, not doing any heavy lifting. Okay, so we have a property that we put up for sale. And again, all of this information and the structure of this is put together before we even buy the property. We know how long we typically would hold a property. It's between 5 and 7 years. The returns on based on that. We know, 5 years we're going to sell it, 2 years we're going to refinance, or 3 years. So this is all ahead of time. So this is figured out, day one to make the investment work. So it's not like, okay, today we'll sell. No, we already have this programmed in to our business plan or strategic business plan that we deliver. Okay. So the sale of the asset, we do this after we've raised the market rents as high as we can or up to market. We've repaired all of the maintenance and the deferred maintenance that we had on the property. And the property reaches its maximum NOI or net operating income. And again, we've already figured this out a couple years before this of when it is scheduled to hit this and hit it at the highest amount of NOI that we believe we can take the property. So we already know this ahead of time, but this is when we sell. This is our what they call the trigger point of selling. Okay, so how are you, the investor, get paid at this point, right? You've gotten quarterly distributions for 2, 3, 5 years. How do you get paid on the sale of this property? Well, again, like I said, we have the sale of the property. We have the proceeds of the property. And then you, as the investors, the limited partners, would get your initial investment back as well as a profit. And again, this is all figured out beforehand as well. Okay, and that's all in the webinar presentations and everything we communicate to you ahead of time. But that's how you get paid on the sale of a syndicated real estate asset. Okay, so no worries for you as a passive investor, right? Again, we're doing all the heavy lifting. You're not dealing with tenants. You're not collecting rents. You're not being a landlord. You're not dealing with angry tenants who get evicted or have water shut off, and you're obviously not paying any bills, right? So you're just collecting the quarterly investment money coming back as far as distributions. Okay, so when you work with us, the Block G Group, again, you will not have any worries as an investor. Your money will work for you, okay, and it'll make more money. All right. So again, in the syndication model, as an LP, you won't be doing any of the heavy lifting, just reaping the rewards of our hard work. And you enabled us to do that by investing with us. Okay. And again, I'd like to thank you very much for staying with me and watching this short video. Please, in the description below, there's a link to my calendar. Please sign up for a 15 or 30-minute phone call with me, and let's talk. If you have any other further questions, I'd love to get you involved in the opportunities we have coming up. And please do that, as well as visit our website at www.opportunitycreator.com. But again, the calendar link is in the description. Love to hear from you, and let's get investing. Have a good night. Bye-bye now.